Welcome back, viewer, to Chungu cha Jamii. Today we are talking matter financial literacy on insurance. Do you have an insurance cover? What policy are you using? How is it helping you? How is it benefiting you? These are some of the questions that we are tackling today. Send in your question, your comments across all our social media networks. That's GBS TV Africa. Our SMS line is 21144. Before we went on a break, I had asked a question. Giving an example of a chama. Now I've gotten into this merry-go-round chama. I'm giving money, and now along the way, everything happens. I'm not in a position to pay. Now, crossing to insurance. I've taken the long-term insurance of 15, 20 years. I'm paying the 5,000 that we said earlier. And now I'm in year 7. And I'm so not in a position to pay for one reason or the other. What happens?
So coming back to that, we can say you had started this policy, and when you started off, we remember insurance is a contract, like Monica told us.
Yes.
So you are in this contract for the next 15 years. But here you come, you've serviced your policy faithfully up to the 7th year. Then when you come to the 7th year, life happens. You can't accommodate the premiums that you are servicing. So what happens is, let's take an example of somebody that is employed. This client XYZ is employed. He was depending on his salary for him to pay the premiums. But so here it has come to year 7 and he can't continue because he has lost his job, maybe through retrenchment. If you've lost your job through retrenchment, there's usually a waiver of premium for 6 months. This 6 months is going to give you a breather for you to know what's next. So after 6 months, you can come back maybe even better and say, Christine, I now want to do a 10,000 instead of the 7. So what happens, we are going to revise the premiums upwards, and you do the 10,000 and your sum assured is the money that you get at the end of the policy maturity. The sum assured will be revised upwards. Or you can even come back and say, I want to continue, but I can't afford the 7,000. Let me do maybe a 3,000. It's also encouraged. So the premiums are going to be revised downwards. And also your sum assured will be revised downwards. That is one thing you can do. The other thing that you can do is you have a period of up to 2 years for you to come back and continue servicing your policy. So if you come back after 2 years, it's going, we say the rubber meets the road. We are going to give you the surrender value of your policy. So you're going to sit down and tell you, our dear client, this is how you've been servicing your policy, but to this extent, if you decide to surrender it now, because you know, it can come to a point that you can't even give up to even just 500 bob. So the only option that is there is surrendering the policy. And when you surrender your policy, we are giving you the surrender value as at that time. The surrender value will depend on the year of cancelling the policy. So that is what happens. And also, another thing that can happen is, why are you not paying? Number one, maybe it can be because of death. If it is death, of course, you're not there, so you can't continue servicing the policy. The policy will be cancelled, and your next of kin will be given your sum assured. So that is what happens if you can't continue servicing your policy.
Maybe to add on something that is also important to note, time is of essence when it comes to a policy. Now, basing it on your example, you come on board and you service an a policy for 7 years. It also depends which kind of a policy, because there are various types of policies. There are policies that are unit trusts. If it's a unit trust and you had run it for 7 years, that means you have a lot of money. All right? And probably unit trusts mostly lock the lockup period is maybe 7 years. And I know some that even you can access as early as 2 years. So that means it has sorted you in terms of cash flow. So again, you need to understand what kind of product did you onboard when you are purchasing a cover. All right? There are some policies even pay you something we call payouts. They pay you on the 5th year, probably pay you on the 10th year, pay you on the 15th year. Those are payouts. Huh? So when you're given those payouts, instead of now consuming the payouts, you can utilize the payouts to pay your premiums for the period of time that you are not working. So again, it's important to note what need were you eyeing when you're onboarding. Were you eyeing the issues of cash flow? Were you building an emergency fund for future use? Was it purely about protection? So also when onboarding, you need to clearly understand what was your goal. That's what we agreed. That what was your goal? Why were you paying that premium into an insurance company? All right. Now, let me talk about a little bit of something that happens in the ground. You come in, take an insurance cover, then you run with it for a period of time. Probably you forget the goal to why you are doing it, and then you disappear for 2 years. And then when you're so broke, then you wake up and remember, I had an insurance policy somewhere, and that was my money. Yeah? Now you start going back to the insurance company and saying, I had a policy here. So by the time you're going there, the policy has already auto-surrendered. Why? Because if it was a life policy and you are not paying it, do you know it would still have paid you for a period of 2 years? It will still have paid you, all right? But it will pay you, but the insurance company will deduct their premiums and pay you the balance of your sum assured. And you are not paying. Now, when you come beyond 2 years, it has already auto-surrendered. It is completely done. Why? Because it is self-servicing itself to sustain itself in the book. Remember, 3 things when you came. Number 1, you are looking for protection. As much as you're looking for protection, there was a concept of saving. Then later, the insurer will give you back, because you did not die, because there was no disability, it will give you back all your premiums plus an investment return.
You've mentioned something interesting as you continue. You've said an auto-surrender.
Yes.
What are we surrendering?
Now, auto-surrendering is relinquishing the benefits of that cover or doing away with the reason to why you came on board when you were paying that premium. Remember, it's a contract, and some of the money that you're giving us in a life insurance cover is going towards taking care of your risk. There, when you come and say, now I can't be able to afford, maybe because you don't have money, all right? That time we are saying you're doing something called you're surrendering the benefits. So what the insurer will do, it will go back to your portfolio. It will check the amount of money they consumed in terms of covering you first, and then the balance, part of it, they'll give it back to you.
When you're talking all this and I'm wondering to myself, do I even know anything? Maybe now to away from the terminologies.
Yes.
I'd want us to understand about the advantages and disadvantages of insurance in the first place. What are the advantages of coming on board for insurance, and what are the disadvantages? Because again, every good has the bad side of it and every bad has the good side of it. So looking at them both, kindly help us to understand.
So number 1, on the advantages side, the number 1 advantage of insurance is that you transfer a risk to your insurer. You give them the mandate of taking care of your financial loss, whether you're there or not, by paying them the premiums. So in like the medical insurance, you pay some premiums annually. If you become sick, the insurer will take care of the medical bills to a limit that you had opted for. Then another thing is peace of mind. Financial loss comes with a lot of stress. You can adverse to that. Financial loss comes with a lot of stress. But if you have the breather that you had taken this risk to another person, all you have to do is press the right button and compensation will be made to you. So we have peace of mind and we also have transferring of risk. And another thing is also financial protection. Most financial losses do come and they milk you out your money. They can enter into your investments. They enter into your other ongoing financial obligations that you already had to an extent that you get yourself into a lot of debts. So if you have an insurance portfolio, depending on the financial obligations that you have, remember we had said you need to understand the financial obligations. So if you dig into the right insurance policy, of course under guidance, it is going to rip you off such kind of stresses. So if you have peace of mind, you can agree with me that, I don't know which vocabulary to use, but if you have peace of mind,
Sure.
there is nothing that can stress you.
There's
when
some
you
rest
get the
that
place.
comes with it.
Yes.
And there's some bit of comfort. Interesting. So that one is on the advantage side. Monica, as you take us through the disadvantage,
Disadvantage.
I'd also want you to talk on the common misconception that we people have about insurance, because also depending with the service provider, different people, different institutions have different perspective or misconceptions of insurance covers. Help us through.
Now, our underlining word is disadvantage. Yeah? And you know, disadvantage is it's a jargon, it's a big word. When you talk about disadvantage, it means that you don't need it.
No, you might need it, so you look for the advantage that will anchor
Yes.
you down and overlook the disadvantage.
So I want to use this word disadvantage in the sense that you made a wrong decision. All right. Now, let me give you an example. An insurance agent comes on your way and convince you to buy an insurance cover. One thing, probably you will buy that insurance cover because she is or he is your cousin, so you want to promote that particular person. Or you are just giving that agent because he's your friend, so you want to promote his business. So you did not buy out of a need. So you bought out of human sympathy. So when you start the journey, you realize in the middle of it, hey, you really didn't need it. So to you, it becomes a disadvantage, because you didn't have to purchase it. You purchased it because someone else initiated the conversation for you to buy the cover. All right. That's why it's important every other time when you're onboarding into an insurance cover, it's important to have the need at heart, the premium and the age. Never forget that. The three. Then you will walk the talk. Right? That's one way to look at it. Now, the other way of a disadvantage is when you did not consider the premiums you want to onboard. Probably you just came in and an agent like me came in, I'm also an agent, and squeezed you out very good premium because I want to get some good commission. And then it becomes a struggle for you even in the third or the fourth month. And then you're not able to pay, and you've already gotten into a contract. And remember, this contract is supposed to run for 5, 10 years. And then we had a discussion of surrender, and those are the conversations and the jargons you'll start hearing in that conversation. And then that's now where the rubber meets the road. That's where now you see a lot of conversations in Twitter, in Facebook, people talking about how insurance is a fraud, is a scam. Why? Because they did not understand clearly why were they getting themselves into that contract. Right? Now, the other disadvantage probably would be your family. All right? Someone came in and agreed, now as a family, we need to take this cover. So you took it because maybe your sister had it, or your friend had it, or your chama had it, but that's not what you wanted. So you are pushed by someone to do it, and you have to do it because you are in a certain social or corporate entity, and it's a statutory deduction for you to be deducted. All right? So you walk the talk with a lot of pain. All right? Because this is something that has to come forth and it has to be deducted on a monthly basis. And probably it's not a disadvantage. It's maybe because you feel that because the income that you're earning today is so little that you think that the little money that are being deducted from you probably would sort you out in another place.
Yeah, sure.
So those are the scenarios that I would address the word disadvantage.
Mm-hmm.
Yes, yeah.
What about the misconception?
Now, the disadvantages I've talked about are the ones that bring misconception, because you do not understand what you are getting yourself into.
Mm-hmm.
And the moment you purchase a cover and you don't understand the reason to why you got into it, that's how you get tired.
Mm-hmm.
I'm sure you cannot run for 3 months. By the time you're doing the 4th month, it now hits hard and you realize this is not what I wanted. Yeah? So what you will do now, that day is the day you will know the doors of an insurance company.
Now, rightfully said, that
Yeah.
is the day I'll know the
Yes.
doors for an insurance company.
Yeah.
So I've taken cover with Insurance X, and now I'm going to know the doors where they are.
Yes.
And now I'm coming to you, Christine, and I'm like, this cover that you gave me is not what I wanted. Now, are we going to revise in terms of giving me a different policy that will be of great, maybe favor, will be on my favor? Or would you say once you've bought it's once sold, not refundable? In terms of you cannot exchange, or can I exchange? Maybe I wanted product A, and now this A is not working out. Now I want product D. Is it possible to migrate or shift products? Now, given that maybe with product A I was paying 5,000, product D I'm needed to pay 7,000 or even 10,000, because I'm scaling either upwards or downwards, either way. But now I want to shift. When I'm shifting, will I shift with the money, if it is possible? That is what I want to understand. Am I shifting with the money that was in A to D, or is there no change? Is once you've made the decision, that's it?
Before I answer your question, if you'd allow me, I would like to say this. Before you sign up for a policy, it is good to understand, why am I taking this? What financial gap am I fulfilling in my life? What obligation will this policy take? If you understand that, then it will be very difficult for you to come and say, I don't want this policy A, I now want policy D. And you can...
On that, let me cut you short and ask you this, on top of that, as you continue. You've said, I have to understand. With you, you might be a good person to take me through, right? But you also have other agents who are so, how do I say, so goal-oriented, self. They want just to make the commissions. They're not here to understand what is going to benefit me as a client, but rather what they are going to benefit them as agents. Now, how do you help such a person? Maybe coming back now, like we said, we are now at the office. Maybe you found me at my office. Finding me at my office, you're going to find maybe every means. But now me coming to you, necessarily I may not find you.
Yeah.
The person X who gave me the policy. Now I'm finding you, who is now understanding everything better about the company, and also with the heart of not wanting to lose this client by the end of the day. How do you help, and how do you go about that?
What I can say, once you sit down with that insurance agent, also you as the client, try and even interview this agent. Ask him, what are the benefits of taking this policy? You can even go ahead maybe and ask the agent, if I were the one selling to you this policy, why would you take it? Have a conversation before you also make up your mind. It's not that I come here with the papers, so I tell you, you have to sign here, because if you sign here, you're going to get this and this and this and this. Also, take your time. If you see that the kind of need this agent is trying to show you is not satisfying, go back and do your homework before signing for it, if it's not an emergency. Then after you might sign up for it, then maybe tomorrow you come and say, I should have taken policy D instead of policy A. So after signing up for a policy, then later on, you come and realize that this is not what I wanted. You might have another another day. What happens is there's usually a waiting period up when you sign up your policy. It goes like, Monica, is it
30 days.
30 days, right? Yeah. You have like 30 days. The company has given you a breather of 30 days for me, Christine, who is a client to this company, to come and see, is this policy, do I want to make any changes? Do I want to move from this policy to another one? So you have that breather space for 30 days. So after that, we will assume that you're okay with this policy and you're going to get away with it.
Let me add something. Yeah?
Yes, please.
You know, Kenyans don't like reading. Yeah? There's something difficult is reading.
Yes.
And remember, this is a contract between company A and a person.
Yes.
And then your cousin or your nephew or your niece is out of school and getting into the industry, and you want to give him or her business. Then you got into the contract. Without your knowledge, just because it's a human thing, you want to make sure this boy excels in this business. And then you realize this was not my piece of cake. Then you come to the insurance company. So you're already in it. So she's saying 30 days you have the leeway. But because you did not read the document, let's go back to reading. So you have no idea that there's that option. Now 30 days are over, you're on board, you're on cover. And then 3 months down the lane, 4 months, you realize I cannot do this anymore. Now, that's the time you want to understand what was this. Then now you come into an insurance company. The only option that is there is for you to bow down to the contract.
Wow.
Now it will take you, because you're already in it, remember? So you're already on cover. The contract is now ongoing. The insurance company does not know your predicaments. That you are doing it for the purposes of a human emotions. Yeah? So that is the time you come in and now you want to explain that I took this, maybe I did not understand and I want to change. The change option only appears in that 30 days. So right now, what we are doing now is to make sure that a consumer understands that you need to buy these policies on need basis. Because when you on board, it's a contract. So whatever that small document or those full prints that people say we put in our documents say, that is what will happen to the latter. So right that moment, you will have to now wake up, arouse, understand, and walk the talk. Or get subjected to the do's and don'ts of that particular document. Yeah.
We established that we don't like reading, that's given with no doubt. And that is why you take advantage of us and give us tons of pages to read. Is there any other way of going about it without reading much? Because again, like we said, if you as a person, goal is to benefit yourself, then by the end of the day, in as much as I ask you to read for me, you're going to read to what you think will please me and not work for me. In such matters, do you have complaints, Ama? You've said after the 1 month, it's do what you do best, pay.
Complaints are there.
Complaints are there?
Yeah,
Yeah,
when you come in
they're
with such a situation.
So, but it now, when it comes to such matters, it's a one-on-one. Now that everyone has a different complaint, so you handle it one at a person.
Yes.
Yeah.
All right, thank you.
Probably to say that almost all companies have a risk compliance department. Yeah?
Okay.
So they will take up your case, they will listen. Not only on life insurance, even things like general insurance, motor vehicle insurance. I know there's a lot of complaint in that space.
Okay.
And probably another day we are going to discuss about how to go about a claim.
Right.
And what can make you not be paid, or what can make you be paid.
That is where we draw the line.
Yes.
Viewer, I hope you're learning as much as I am. Continue sending in your question across all our social media networks. That's GBS TV Africa, or SMS line is 21144. We'll be back shortly.